And good morning, ladies and gentlemen. This is your webinar host and senior market analyst Jose Tormo speaking, broadcasting to you live, doing a quick audio and visual check here at 11 a.m. as we're now getting started. If you'd be so kind to confirm that the audio and visual is clear on your screen, please do so by typing in a Y or a yes in the question section if you'd be so kind. Excellent. Thank you for your time. Thank you for your trust. And as we're now getting started, ladies and gentlemen, we're going to be looking at the live market, talking about an incredible opportunity here to help you understand what grid trading is all about. But at the end of the day, I wanted to go ahead and show you this real quickly here because this is what we looked at this morning at our 8 a.m. webinar presentation, where we had an overwhelming response to traders who didn't really know how to use grid trading and saw how it works, how it can help them with AB boundaries, how it can help them with Fibonacci's, how it can help them with the strategy. And literally, since the 8 a.m. webinar, posting these types of trading opportunities based off sizing in the market, here we are at the 11 a.m. webinar, and I'm already up 130 to 145 pips of movement because of 4 different positions sizing into the market with the grids. Type in a Y or a yes if you see the total P&L right here as far as pips, 132 pips right there so far since this morning between the hours of 8:29 to 8:58. And again, those are opportunities here that we have seen based off of what we were looking at in the market, where we were looking to go, how we were looking to size in, all that wonderful opportunity here, multiple opportunity here to take advantage of the markets. And again, let me just pull up these charts real quickly here so you can see them with the Fibonacci's, sizing in the levels. Also taking a look here at the pound Japanese yen. You can see how the market took us in, sizing in this market. You can see over the last 7 trades, over 800 pips there. You can also see here how this market, and again, we'll get into greater detail here as we go through this, but as you can see here, this market is over the last, this is the wrong one, it's the same chart, but it's the wrong one. This is pound Canadian. 1 hour time frame. You can see over the last 7 trades, over 1,000 pips has been capitalized on with this. So at the end of the day, what this is here to help you do is to get into the market and take advantage of the waves of the market. Okay, that's what it's designed to do, is to help you take advantage of these waves and ultimately begin to see how the market works, to see how the market moves, and to further your trading career by capturing pips consistently and thanks to the market's wave movements, wave patterns. So again, what I want to do here is I was showing everybody how to take advantage of that. So again, you can close out. We can close out with 130 pips and be done like that in less than 2-3 hours. So it's one of those things here where at the end of the day, you don't have to have too much time to pay attention to this, and it's going to work out beautifully for you. So what's the best time frame to grid trade, says James? It works on any time frame. It depends on your risk assessment, but it goes, we can do 15-minute time frames, we can do 30-minute time frames, hour, 2-hour time frames. So the reason why I wanted to show you that up front is because, since yesterday alone, if you take a look at what we showed yesterday, this is the wrong slide, give me a second here. Yesterday alone, since yesterday's webinar, we had 2 trades that had already paid out 126 pips net with the pound New Zealand, and we also had 102 pips that I closed out this morning with the pound Australian. So to make another 145 pips since this morning at 8 a.m. just goes to show that this is a strategy here that anybody can do, anybody can profit from, anybody can trade with, and it's very, very simple formula. Okay, all you have to do is understand that we're going to be showing you how this works, and we're going to help you take advantage of it. Now, what I want to do is I want to go ahead and structure this webinar in 2 parts, because there is, with this morning's webinar festivities, we had an overwhelming response because of the superpower bonuses I gave away and because of the free matrix tool. And so I've got good news and I've got bad news for this 11 a.m. webinar as we start. And I mean, it's not really bad news, but it's kind of like, your timing's phenomenal, so to speak. So before I go into the in-depth analysis and we go into more different currency pairs of your choice instead of what I've already looked at here, I want to look at other ones as well. What I want to do is this. I want to help each and every one of you try and take advantage of this if this is something you've wanted to participate in, own, master, trade. So here's what I'm going to tell you. Right now, folks, this tool to use the grid trading tool is available for life. That means you can use it for life. As long as you have charting software, you can use it for life. But not everybody will have lifetime access to it. Those that don't get it on this move will have to pay a monthly service fee for it, even though it's worth it. Who wants to pay a monthly service fee when you can have it for life for free? Also, ladies and gentlemen, we've only got a very limited amount of spots left for this lifetime grid chart, grid exposure, and also we're offering with this course 30 days money back, 100% guarantee of the grid trading course. So that means we're so confident you'll love this grid trading course that if for any reason you're not satisfied over the next 30 days from the class and you do not see long-term potential with the grid trading course, we'll give you 100% back of your money, whether you paid for it in payment plans or in full-time payment. So the reason I'm saying this right now, I'll bring this up again at the end of the webinar, but here's the biggest issue. The biggest issue is we opened it up to 100 people, and now we're down to less than 30 spots left because of this morning's webinar. Okay, so what I've been told is that number is dwindling. So if you want this grid trading course, if you want a money-back satisfaction guarantee attached to it, if you want the lifetime matrix tool attached to your charts with it, then we've only got 30 spots left for the 30-day guarantee and the matrix tool for life. So if you are any one of the 30 people that this webinar will produce to close this out, because Josh wants to keep this intimate and close the books on this once and for all, do me a favor and type in your telephone number right now if you are interested in speaking with someone about this opportunity. I'm not saying you're locked in yet. I'm not saying you're committed. I'm not saying you're, taken care of yet because you haven't even had a one-on-one walkthrough with your account rep. But if you have the urgency in your mind that this is something you want to take advantage of and trade with on any time frame, type in your telephone number because we've got 30 spots left. I want to give everybody a fair shot. I'll do it now at the end of the webinar as well. I'm going to give everybody 2 minutes to do that. And if you'd go ahead and be so kind of start right now, the timer has just begun. I'll go ahead and we'll go to the live market in about 1 minute and 50 seconds from right now. But what I want to do is I want to go ahead and give you the opportunity. Type in your telephone number, speak with your account rep, see what we can do with payment plans, see what we can do to get you the 30-day guarantee, see what we can do to get you the matrix tool for life. All this opportunity is going to be an incredible one for you. So hopefully you don't miss out on the 30 spots. I'm not going to call anybody's names out right now. I see a couple telephone numbers coming through. Those that are posting their telephone numbers, you know that we see you, and we'll mark you as top priority. We'll answer all your questions, roll the red carpet out, make sure that you have all the information you need before you make a decision. But I can assure you of this, with a 30-day money-back guarantee, with the trading tool being a lifetime access tool now, for those of you, the 30 spots, this is going to be an opportunity here for everyone to take advantage of this setup here before there is a monthly service fee with it attached to it. So after the next 30 people sign up, there will be a monthly service fee for the tool. It'll no longer be offered for life, and this 30-day guarantee will no longer be available. We're only offering the 30-day guarantee to those who are serious about taking action right away. So if that's you, you've got about 30 seconds left before we go live to the market and we discuss different currency pairs and more opportunity here to talk about these trades. So I see you. Thank you for your telephone numbers, folks. Keep them coming. I appreciate the trust. And again, it's to have a conversation with your account rep to see if this is for you and what you can do with it, because this is an opportunity like never before to have trades, simply put, being executed thanks to the waves of the market. So hopefully everybody here is taking action that wants to take action. That way you don't have to sit here, take my word for it. You can test drive this on your computer and see whether it's the right program for you. Because let's face it, at the end of the day, the only person you're going to trust is yourself, right? So all we ask is that you give it an honest effort because your timing is phenomenal, okay? All right, so those of you that have typed in your telephone numbers, thank you very much. We will go ahead and be able to reach out to you towards the end of the webinar. So it is for the grid trading course to give you a 30-day money-back guarantee and also the lifetime access to the tool itself. So thank you for your time and your trust. So what I did was I looked over, the pound prediction breakout pairs this morning in the webinar. And what I want to do here is I want to go over a couple different currency pairs so that we can go ahead and showcase this tool and see how it works on other currencies also. So if you'd be so kind to type in which currencies you would like to see analyzed, I'd love to go ahead and look at them and give you some feedback on what the markets are doing and how to take advantage of it. Okay, Deborah says Euro New Zealand. Okay, we'll take a look at the Euro New Zealand, not a problem. Thank you, Deborah, for that. We have here, let's see, Michael says Euro Pound. Okay, we can take a look at the Euro GBP. All right, awesome. And let's see here. We also have Steven says the Euro US dollar. Let's say we're going with the Euros today, huh? Euro New Zealand, Euro Pound, Euro US dollar. And let's see here. And we've got Sam with New Zealand Japanese yen. We'll throw in a JPY in there. So New Zealand Japanese yen, and then Euro New Zealand, Euro GBP, and Euro US dollar. Okay, so what we did here was we took a look at all the GBPs pretty much for the pound breakout prediction. Let me go ahead and tile these together so that everybody can see pretty much what we did. I just manually closed out of the grid trading, so that you know, so far was 228 pips since yesterday, plus 145 pips today. You know, we're looking at 13, 7, 373 pips so far in the last 24 hours on a couple of currency pairs, grid trading this market. So everyone saw the entry opportunities were very scarce because of the volatility, but with grid trading, it took the guesswork out, and we were able to take advantage of it. Franklin, no worries. Thank you for your number. You know, if you're driving, guys, be careful out there. If you're driving, by all means, do not text and drive. You know, make sure you pull over before you type in your number. But thank you, Franklin. I appreciate you letting me know. All right, so we looked at the pound Canadian, pound yen, pound Australian, pound New Zealand this morning. And again, these were the results here so far, just to kind of show you what's been taking place with these on the 1 hour time frame. Let me see if I can tile these. These were, you know, to size into the market. We had 802 pips in the last 7 trades. So that's 802 in the last 7 trades for the pound yen. 1,329 pips in the last 9 trades for the pound New Zealand. We had 1,022 pips in the last 7 trades for the pound Australian, and we had 1,029 pips in the last 7 trades for the pound Canadian. So within the last 7 to 9 trades, if you're looking at 4 different currency pairs, you know, you've got 802 plus 1329 plus 1022 plus 1029, over 4,182 pips in the last 7 to 9 trades of these 4 currency pairs for the pound breakout prediction. That, to me, phenomenal. Okay, phenomenal opportunity here, because at the end of the day, this is all an opportunity to start learning the art form of capturing pips like never before. So let's go ahead and open up a new workspace right now. Call it the live market. Let's just call it the 11 a.m. webinar. Let's do that. 11 a.m. webinar, grid trading. Let's see here. We'll just call it grid trading. How about that? Keep it simple. This workspace will be called grid trading. And so what I want to do here is I want to go ahead and open up. I'm going to go ahead and look at opening up here 2 time frames for these currency pairs. So instead of doing like 4 different time frames per currency, I want to go ahead and do 2 so that we can go ahead and cover all 4 of these pairs. So the New Zealand yen, we'll take a look at, for example, the daily and the 1 hour, okay? And then do the same thing here for the Euro New Zealand. Same thing for the Euro Pound. And same thing for the Euro US dollar, okay? And so essentially what we've done here is we've taken advantage of the wave movements in a very powerful way. What do I mean by that? Well, by doing normal technical analysis, we begin to see, you know, why the markets are doing what they're doing, where the markets may be looking to go, and so on and so forth. But everybody who's typed in their telephone numbers this morning at the 8 a.m. webinar and who dropped that number dramatically to make only 30 spots left, you know, for this lifetime access and for this 30-day guarantee, they want to win upwards of 90% of their trades by taking control of the wave movements. All of you who have typed in your telephone numbers this morning at the 11 a.m. here webinar with me. you obviously want to win upwards of 70 to 90% of your trades by taking control of the wave movements. So what I want to do here is I want to do analysis, but once we get to the 1 hour time frame to begin utilizing the grid trading, which it can work on any time frame again, what I want to do is help you see how you can divide the market into buy zone and sell zones and trade them, with the grids to optimize any strategy you've got, to amplify your results. It just takes the principle that price points will be revisited again, due to exports and imports, and it's just a wonderful, wonderful opportunity to get you into a buy low price point or sell high price point when it comes time to taking a trade here. Joseph, if you want to contact your account rep, I'm sure they can help you out with that. Leo, thank you for your number. Hey, it's my boy's name, Leo. My son's name's Leo. All right, so we're going to take a look at the New Zealand JPY first, because that's the elephant in the room, so to speak, because the rest are euro pairs. And then we'll go left to right. We'll go New Zealand, Japanese yen, euro New Zealand, euro pound, and euro dollar. Okay, so excuse me. Let's take a look at the daily time frame. And again, all I'm going to be looking for here is simple techniques. Okay, simple techniques to see what this markets are doing, how to take advantage of it, and ultimately where's this market going. So far, what I'm going to do is I'm going to take a look at this market that was making lower lows and lower highs and begin to draw some automatic Fibonacci's here, automated Fibonacci's from this low to see if we have any bullish Fibonacci swing, available. So I'll go ahead and start my auto fibs from this very low in the charts, and also draw a smart trend line as well, just to determine whether or not we're still in an uptrend or we're sideways or whatnot. And then what we can see here is where this market's moving here over time. So as we can see here, we've got this market giving us Fibonacci swings on the daily time frame over and over and over again. And the market came down, okay? As the market came down, it took out the A of the Fibonacci swing, and it broke the trend line as well and pulled back. So by taking out the A of this movement, we've also would have had here an inner smart trend line that would have been drawn over the course of time on this daily time frame. Let me zoom in to show you that, because one of the cool things about technical analysis is that the better you get, right, the more profit you can begin to generate. Come on, where are you? Right there. There you go. There you go, Jose. All right, so that would have been the inner trend line here, and obviously with the market here heading towards the 1.618, once that trend line broke, right, we've got some deeper retracements happening in the sell zone, because what do we know about trend lines that break, everybody? Anybody remember what I keep saying every single time trend lines break? When we have inner, outer, and long-term trend lines, what happens? Crowns, yes, we look for crown formations, but typically, exactly, Gerard has it correctly. Sam has it correctly as well. The markets typically tend to gravitate towards to the outer trend line for the next bounce. So even though we're in a bullish Fibonacci swing, okay, we got to always remember that if we're not in the appropriate zone, it's best to see the market going towards that trend line, because it's kind of like a magnet. So there, the market broke the trend line, right? It broke that inner trend line right there, and now it looks to naturally gravitate to the outer trend line for the next bounce. So this is exactly what the market did. It gravitated towards it for that next bounce, okay, right there. Now, if that trend line breaks, then we should have here perhaps a major reversal. Well, it looks like the market broke and then bounced back up here and is currently sitting on the trend line itself. So what would tell me that this market is going to either climb? What would it tell me it's going to fall? Well, right now, what I'm looking at is a trend line break, okay? And with the trend line break, it took out the A as well all the way down here. But essentially, this is what I'm looking at right now, is this market giving us a big left tip, big center tip, and then the market here pulling back to form a right tip, king crown formation, okay? And I pressed the button too many times, so it's going to give us a funky looking crown there. But you get the gist of this movement, which was the trend line broke. There's no more bullish Fibonacci's here. So I would have this as my A. I would have this as my B. Okay? And then what they say here is that whenever you've established an AB boundary for a crown and a right tip, you would now begin to place your trend line across the A and the C. Okay? So this trend line, we'd go ahead and see what we can do here as far as if we place an automated trend line, that would be okay as well. Let me zoom in on this to draw it, but across the A and the C essentially is where the rules of this would tell you to do it. So there's the smart trend line in regards to where this market's at. And as you can see, it is across the A and the C of the crown because this is the left tip right here. This is the center tip right here. And this is the right tip right here. So whether or not this is going to be a crown that fulfills, what if it fails, Jose? What if it doesn't? What if it doesn't want to fall and it's just a a false setup and the market just pulled back and it's going to climb now? Well, as long as it stays below this downtrend line, it's in the sell zone, okay? And it's got no other choice but to continue falling. It can pull back to that trend line and then fall, but if it breaks the trend line and breaks into the buy zone, then we've got a different story as far as, okay, it may be a false crown setup, okay? So as we look at this, now what I'm going to do is I'm going to go ahead and say, let's look at the formations that we're looking at here. Do we want to draw the AB boundary manually? Do we want to draw it with automated fibs? Here's what it looks like with smart Fibonacci's from the highest point of the charts. Over and over again, not giving you very much to work with, okay? That's very many highs, very many lows. That's why they keep getting reversed there. So the overall pattern is to utilize our regular Fibonacci's to draw manually, hand-drawn Fibonacci's to the A-B boundary of the crown. So this is what we see here so far. On the daily time frame, we've got our AB boundary here of the crown. This market has pulled back to right around a 5.0 level and has begun to make lower lows, lower highs. So one of the cool things about this is that you don't have to just simply marry this trade. And what I mean by that is a lot of people see a lot of choppiness and wave movement in the market, and then they get married to that trade and say, well, no matter what it's doing, it's got to go down. There's trends inside of trends. There's consolidation inside that movement. Look, this market here was trending bullish for weeks. Then it was moving sideways for weeks. And then it was moving bullish for weeks. And then it was moving bearish now for weeks. So now, this is the most recent market direction. Okay? From this right tip area, the market has begun to fall. So what we're going to focus in on, ladies and gentlemen, is very simple. We're going to focus in on this movement here so far of bearish down AB boundaries on smaller time frames. That's all we're looking at doing for right now, because if this market wants to pull back deeper, we don't need to be in any bearish trades. We need to be in the direction the chart wants to go and trade with it. If that makes sense, type in a yes. Now, can we map out where the D extension would be of this swing? Absolutely. And that would be here at 60.156. So we can always map it out, 60.156. We'll go ahead and color it red to match the Fibonacci D extension. And so now, what I'm going to focus in on right now is simply put, drawing a horizontal line across this highest point, which is the C pullback. And that's a price point of 83.798. And that's where we will begin our analysis on the 1 hour time frame. And this is where we end our analysis. Why? Because if the market's truly going to go from C to D, then the bears are going to be where we decide to begin looking for trades. But the markets don't move in a straight line. They move in a wave pattern. You can already see how the markets are moving in a wave pattern here. Waving down, waving up. Waving down, waving up. Waving down, waving up. All these waves right here are what typically would knock a trader out of the market if they get in at the wrong place, the wrong time. With grid trading, that's now a thing of the past because you're able to perform your own equity management according to the plan that Josh is going to give you in the class in May. You're also going to have the opportunity to get sized in appropriately, okay? And at the end of the day, it's going to be something here that is very easy to understand, very easy to execute, very easy to obey, and you're going to wonder why you didn't start this a very long time ago. And again, this has always been available. It's been very difficult to monitor your trades manually. It took too much time. So now we're doing things automatically, and we're doing things with a matrix. So that's the analysis so far that we're seeing here so far on the New Zealand Japanese yen is that king crown scenario. If this makes sense so far, type in a Y or a yes, and then we'll go ahead and move over to the 1 hour time frame and show you how this works. All I'm doing here is I'm going to try to focus on how to get from here to here safely as possible and with equity management in mind. So I'm going to take this horizontal line that I drew and I'm going to link it to my 1 hour time frame and the D extension, and I'm going to link that to the 1 hour time frame just to have it on my 1 hour charts. I know it's still very many pips away. I mean, this thing is 1,600 pips away, but still, it's good to have a point there to see where the market's going to fall if it fulfills that crown over time. So by taking this information on the daily, I'm going to now break this over to the 1 hour time frame. And on the 1 hour time frame, as you can see, looks like it was more of like a double top here that formed before the market fell. And ultimately now is where the fun begins, because this is where we can see the market performing the opportunities to get us involved in trades and setups. So what I'm going to do right now is I'm going to zoom in, okay? And as I zoom in, I'm going to go ahead and draw a downtrend line, because as long as I'm going to be selling with technical analysis, I want to have my trend lines showcase the markets in the direction this chart wants to go. So I draw my smart trend line from that highest point and see where the market's at. Are we above it? Are we below it? What's going on? So I can make an educated decision, right? Because as long as the market stays below the trend line, we're in the sell zone, we're doing good. We know that above this is the buy zone, below is the sell zone. So we got to make sure that we're doing things the right way. All right, so where are we at so far in this market? Are we in the buy zone or the sell zone of the trend line? Appreciate that, David. Thank you very much. We're in the sell zone, okay? So being in the sell zone, one of the patterns we've recognized is that ever since this trend line began, okay, this market typically gravitates towards that trend line, okay? Falls, bounces, falls. If it's in a U-turn and rally, it could rally and bounce off that trend line. It has every right to do that. And that's where sizing into the market comes into play, because if you're looking for the market to give you a trend line break here to fall, well, typically, if the market breaks that trend line, it'll pull back anyways. So what's going to take place is this market's going to take you in, and you're going to be trading, and then you're going to get stopped out, and then the market's going to go in the direction that you were trading in the first place. Then you're going to get frustrated, and you're going to wonder why you can't make as many pips as you anticipated on making in the first place. Okay? So now in the 1 hour time frame, the key thing to do here is just to keep things simple, to keep things organized. Let's go ahead and start from that highest point to see if we have any more conservative targets to go after in regards to the Fibonacci's. I'm going to go ahead and place my smart fibs from the highest point with one click of a button, and we should begin to see some good A-B swings here taking place. You can see the automated fibs doing their thing, doing their thing, doing their thing. And here so far, this market is in a down A, B boundary. It gave us the 80-20 rule, which is the market coming up to the 382 pullback, fell, 20% chance to hit the D, found support around the 1.827, pulled back deeper in the boundary to right around the 5.0 level, support becoming resistance. Now we're making lower lows, lower highs, lower lows again. D extension there is going to be set for the market to reach 75.438 as the target. Type in a Y or a yes if that makes sense. We're in a downtrend line. We have a down AB boundary. We just got done doing a sell high price point now, and the market appears to look to want to fall. But if it wants to pull back a little bit, we can get sized into this. So how is this going to work for us in regards to sizing into the market? Okay. If we want to size into the market here, then here's how this is going to work. I need you to understand the methodology behind it. Okay. If we believe this market is going to fall to that D extension, how many pips here? 142 pips to the D, then there's many different scenarios this market can fall to that D extension. Okay, this is the live market price right here. So from the live market price, it can do a couple of things. It can pull back like this, and then fall, or it can just straight up go down, retrace and fall, or it can go sideways before falling. Having a Y or yes, that makes sense. Different scenarios the market can perform before fulfilling the D extension if it stays below that trend line. Okay, so the mathematical equation that we're going to do right now is to determine, okay, simply put, it's going to be helping you determine what is the distance between the levels of the grid for this time frame to trade and be taken in at strategically. Now, why do I say strategically? Because this mathematical equation will allow us to scale into the market appropriately. If the market goes against you, well, you'll be able to add to the position appropriately with equity management you're going to learn in class, so you can take advantage of the waves of the market or the grid. Okay, so when investors do this, it's very difficult to lose. Okay, so let's go ahead and showcase this here right now on the 1 hour time frame. And the first thing we're going to do is we're going to go ahead and take this 3,000 bar memory chart and turn it into a 500 bars of memory, okay, to kind of minimize the movements that we're seeing. And we're going to compress the charts here and see what's the highest point of the chart, what's the lowest point. Well, this is the highest point right here. This is the lowest point right here, okay? And so now what I'm going to do here is measure the distance in pips. That's 276 pips, okay? So the formula is the following. We're going to take 276 pips, multiply that by 3, gives us 828, divide that by 2, and then divide that by 10. And that gives us 41 pips per each level that we're going to size in on, okay? So, 41 pips. So what we can do here is keep things very simple. 41 pips, here's how this is going to work now, okay? Let me go ahead and go back to the chart, put 3,000 bars of memory to kind of show it to you with the Fibonacci's. Now I'm going to go ahead and open up my matrix right down here, which everybody who signs up today, we've got 30 available left, 30 matrix tools left for life. You get it for free on your charts for free for life. If not, you have to pay for this every month, but you got 30 spots left. So if you typed in your telephone number earlier, be grateful that you were one of the 30 people that are going to be taking this, final run before we have to start charging more for each month. But this is the matrix tool. We know that the market now is providing us here after the formula 41 pips. Distance between the levels is 41 pips. Okay, I'm going to put here 10 different levels. You can change the lot sizes depending on what your risk assessment is. But again, remember, you're going to have proper equity management plan. So the market going against you doesn't matter because you'll see how that works. But then what we're going to do here is we're going to take this and instead of putting the one-sided trades, we're going to place them on both sides in case the market pulls back. And since we're looking to fall, we will sell the trade. And the cool thing about this is that you can either place a hard stop and a hard limit, okay? Or what we can do here is we can go ahead and say, well, if the distance between the levels are 41 pips, I just want to make 41 pips net and have it reset my trades once the 41 pips is hit in the direction that it keeps on going. So we'll do that, close all orders on net pips for 41. Okay, and then click OK, and quicker than a hiccup, we should have our grid, okay, which is now in play. Now, type in a Y or a yes if this makes sense here so far as the levels of the market. Okay, so here's where we are now standing as trades. We are in the market right now, okay, selling this market. If the market falls to this target right here, we make 41 pips net. We're closed out. We'll resize in. If it pulls back deeper, okay, Jose, what happens if it pulls back all the way to the trend line? Okay, well, watch this. What happens if it does this? It pulls back right there, okay, and then it waves down and pulls back here to the trend line and then bounces down, right? Well, that means the following individuals, or the following ladies and gentlemen, will happen. We'll be sized in right there. We'll be sized in right there. At 41 pips, the distance, per grid, when this entry right here touches this one, guess what just happened? Our first trade is negative 41 pips. Our second trade is break even. Our third trade is up 41 pips. 41 minus 41 is 0. Break even is 0. So we're at 0, okay? And then if the market comes down like this to our original entry, we made our 41 pips net. Having a Y or a yes if that makes sense. We didn't even have to go past our original entry point to get our 41 pips that we were looking to make in the first place. And then once our 41 pips net is hit, we'll be resized into position, and you can continue making 41 pips per level until you get to your destination. Okay? Wonderful opportunity here to show you how to size into the market and get involved in trades. Let's just say for the purposes of demonstration that we do this AB boundary and we place a counter trend line like this, okay? And upon the counter trend line breaking, right, we placed our levels, and let's just say the market took us in right here. Is that fair to say? Right? Possibly. I mean, this is going into the past now, but let me just show you. Because we have a big pullback right here, right? So let's just say this took place right here. Trend line broke, and when the trend line broke, right, we assessed our entry point, and we got taken in selling right there when the market fulfilled that point. At 41 pip levels, well, here the market goes down, gives us 41 pips net. Right there, 41 pips net. Then, since we're still going after a D extension, we'll resize into the market right here. And the market gives us another 41 pips net. And then since the market's still going towards our D, we'll resize into the position right here. And here, this is our original trade right here, okay? So this is how this works. Check this out. We entered, then the market pulls back, okay? So let me delete these previous entries. Now that it pulls back, it'll strategically size us in right here into a trade. And then right there, when this entry touches that line, our original trade is a break even. This trade's 41 pips. Break even plus 41 pips is 41 pips net. Type in a Y or a yes if that makes sense. Okay, so we made our pips back just like that. Now we're resized in right here. And the market comes back, strategically takes us in as the market's pulling back. Still going. Right here, it sizes us in once again. Right there, and right there. Again, strategically sizing us into the market. So as you can see this market here, we've got, so far, look what this market's done. Okay? Pulled back, sized us in, waved back down. So let's do the math so far on the trade. Okay? Our original trade is down 79 pips. Let's just put negative 79. Okay? Our second trade that sized us in is down 37 pips. So negative 37. Then our third trade is break even. Let's just put break even. Our fourth trade is up 41 pips, right? Our fifth trade is up 84 pips. So let's just go ahead and do the math here, okay? Pull out a calculator. As you can see, we've got 79 minus 37 equals negative 116 plus 0 break even equals negative 116 plus 41 pips equals negative 75. Plus 84 pips. We're positive 9 pips on our trade right now. We're positive 9 pips. So we've got about 32 pips left to go before we make our 41 pips net. And we were pulled back and taken in a deeper retracement. Having a Y or a yes, we're 9 pips positive right now. Positive 9 pips out of 41. So as you can see here, if we would have used this as the original C pullback to enter, look at the results. 40, 80, 120, 129, 30. We're up 132 pips on this swing so far. On this swing, we're up 132 pips, thanks to the grid. Now, Ronald has a great question. Ronald says, Jose, but what happens when it keeps going up and takes out the A? Well, there's going to be stops and limits to these types of moves that Josh is going to teach you as far as a hard stop, hard limit for position trades, for scalping trades, and for swing trades, Ronald. So this is just showing you how the grid works. You're going to have hard stops, hard limits. You're going to have targets in mind. All that good stuff is going to be taken into consideration for the class. That's why it's a course itself. It's not going to be, hey, these are grid levels forever. If it pulls back against you for 3 months, that's not how it works, okay? Just so you know. And yes, the trades are automated, George. Yes, sir. So that's pretty awesome in regards to looking at what the New Zealand Japanese yen can do by sizing into the market, right? Type in a Y or a yes if you like what you see so far with this currency. And again, I want to thank, let me see, I just saw him here earlier. Brian, thank you for your telephone number. Marvin, thank you. Saul, thank you. We also got Jeremy, thank you for your number. Grant, thank you for your number. Carol and Chikasa, thank you for your numbers as well. So it looks like you guys want to definitely take advantage of this opportunity. Wonderful. Like I said, we got 30 spots left for this to use as a lifetime tool. We've also got 30 spots left only for 30 days, money back guarantee. So this is how this works, okay? Now, as we begin to look at the other currency pairs, first of all, does that make sense to help you identify wave movement and opportunity? Right? Awesome. John, that's going to be something that Josh has with the equity management plan. I don't have the plan in front of me right now. That's because Josh is the creator of this course. So it's going to be, you're going to be dealing with Josh Martinez one-on-one in the class content. So he'll help you with account balance and size of lots and all that good stuff, my friend. This is not a guessing game for people to get in and just place however many lots they think they should be placing with this. This is a strategic, helping you dominate, kick this market's you-know-what type of environment where you don't have to now wait for trend line breaks or candlestick formations or buy low, sell high price points. It's good, but you can kind of have now the competitive edge of technology on your side. Emmanuel, thank you for your number as well. Sue, thank you for your telephone number also. Appreciate that. Euro New Zealand, okay? The Euro New Zealand, as you can see here, has been making this opportunity right here. Yes, Don, 30 days guarantee from when the course starts in May. Not right now. That doesn't make sense to do it from right now. So it's 30 days from the first class because you have to have the actual grid tool in your possession. You can't have 30-day guarantee if you don't have the tool in your possession. I mean, that's not how it works. Okay? So this is the Euro New Zealand, and the Euro New Zealand, as you can see, breaking trend lines, giving us a nice bull crown setup here. We've got a very large left tip movement happening here, center tip, and the market pulling back to form a right tip. So we got a king crown scenario here on this chart of the daily time frame. So what we're looking at here is obviously formulating a plan of utilizing our AB boundary here of the king crown. So in this area, we have to focus in on what is the AB boundary of the crown. If you use smart Fibonacci's from this low, because I know a lot of you are probably thinking just use the smart fibs to see, you're going to get taken out because the market was retracing bearish to form that right tip. So this is where the king crown steps come in handy. And this is the same AB swing as the monthly time frame, just so you know also. But excuse me, here we see the AB swing of the crown, and so this would give us here a retracement that if we draw our smart trend lines from the V high, you can clearly see that we've broken the downtrend line into the buy zone, making higher highs, higher lows, higher highs. And the target to go after here, this market came down to a low price point of 1.45276, which is a 76 retracement. So the 1.27 here would be the extension at 1.96030. That would be the Fibonacci D extension of this movement here. So we're slowly creeping up towards that D. Now this is a daily time frame, but the deepest retracement will always be the C pullback. And as long as we've identified, right, the C to D wave movement, now our job as traders is to get from that C to that D as safely as possible. Okay. Now we know the market's not going to move in a straight line, right? It's going to move in a wave pattern. It already has begun to move in a wave pattern. You can see that clearly from the markets rallying, retracing, extending. Rallying, retracing, extending. Rallying, more than likely will retrace and continue extending, right? All this is type of typical movement that we see this market performing. So the big key is, do we have any more conservative, target areas right now, sub swings? Well, let's find out, right? From the C pullback low, let's take our smart fibs. And with one click of a button, you can see that we are now waving, our second wave into the market. We've got here, you can see A, B, C to D, A, B, C. Market looks like it's heading up towards that D. Hasn't yet fulfilled that D extension, though, and the price point would be 1.59964. 1.59964. That would be the D extension of this move here so far. Type in a Y or a yes if that makes sense. No, Mumtaz, this is not Analyst on Demand. This is a client webinar presentation. Okay. Bothwell, thank you for your telephone number, my friend. We'll be able to reach out to you as well. All right, give me one moment, folks. If you'd be so kind. Just want to make sure I have this open. I know we've only got 30 spots left, so I want to make sure that that your account reps are actually making sure they're taking down these numbers. All right, so since we don't have the D extension hit, okay, and Valerie, thank you for your telephone number as well. Since we don't have the D extension hit, right now the goal is to, okay, the market might retrace a little bit, but the D extension is still going to be the target to look to go after. So we have to realize at the end of the day, what is it that that we can do to put ourselves in a position to succeed here, right? And how do we take advantage of it? Now, we are at a sell high price point, okay? So a sell high price point, meaning the market can begin to retrace. However, okay, sometimes it can retrace very deep, sometimes it can retrace very shallow and then take off to the north. So the thing that we got to do here is keep things very easy to understand, easy to execute, easy to obey, and take a look and see what the patterns are showing us on the smaller time frame. So we're going to take this D extension right here, and we're going to link it to the smaller time frame. And so on the 1 hour chart here, what you can see is this market here climbing. So this market was making lower lows, lower highs. Now it's making higher highs, higher lows. Do we have any, Fibonacci AB boundaries we can use here to our advantage? Let's go ahead and see what we've got. Let's take a look at our smart tool here. This market climbed up, climbed up, climbed up. Sideways, sideways, kept on going. All right, so here we go. Clearly, this is the 60-minute AB boundary right here, with the D extension being pretty much in alignment with the daily D extension as well. Type in a Y or a yes if that makes sense to you as well. Do you see how the D extension, the 60-minute time frame, is in alignment with the daily as well? So what we can do here is, well, you know, we should sell to the 382. Should we? Because what if it doesn't go to the 382 and then takes off to the D extension to fulfill? Then, you know, this is where we begin to tell ourselves one thing and the market does the other. As long as the market's making higher highs, higher lows, okay, we have to trade in alignment with the charts. Okay, so I would look at this as a bullish trade, even though the market could retrace to the 382. Okay, it's just a wave down and a wave back up is what I'd be looking to do here. So I'm going to go ahead and minimize this from 3,000 bars that I normally have to 500 bars of memory and begin finding the levels. Okay, so as you can see here, there's the D extension of the daily, and then as you can see here, the same D extension is pretty much, you know, within give or take, but we'll go back to the 3,000 bars of memory in a moment. But what I'm going to do right now is get the high and low of this chart. Here's the high, here's the low. I'm going to measure it. 755. Okay, so we take our trusty calculator here. We go 755 times 3. Divide that by 2, divide that by 10. 113 pips is the distance between levels. 113. Okay? So let's go back to 3,000 bars of memory to kind of get our Fibonacci's back on there. Or however many bars of memory you have that'll allow you to see your analysis here, which is right there. And now we're going to go ahead and begin to implement the levels of 113 pips. So we open up the matrix, put some levels on there. 113 pips on both sides of the market, buying, and I want to get closed out right there. And so what we'll do here is we'll put, I want to be closed out on 113 pips. Okay? Click OK, and now the levels are there. Okay? Simple as this. Simple as this. So in situations like this where you say, you know, Jose, what if the market goes past the A? Josh is going to show you all the information of, hey, do you want to place your stop at the A? Do you want to have a stop loss way below the A? You know, for equity management, he'll show you all that information and more. But ultimately, what you have to figure out is, how does this work? Okay? How does this work? How do you take advantage of it? How do you dominate? Let me show you what this looks like on the previous C to D wave movement, because look, there was some consolidation taking place there. And a lot of you are probably wondering, how does this perform in consolidation? How does this perform, you know, when the markets are supposed to go up? Because this is pretty much the same situation we're seeing here right now. Okay? Let's say that we have this C pullback, AB boundary, and we know the AB swing is here. We know this is a daily time frame D, but we want to have a 60-minute time frame D fulfilled. So the market takes us in buying right here on this level. Each of these levels is 113 pips. Okay? So when the market does this, sizes us in right away again. We're still in the AB boundary. Well, right there, we just made 113 pips net, because our first trade's break even, our second trade's up 113 pips, 113 pips net. Type in a Y or a yes, that makes sense. We did it, right? Now we're resized in right there because we're still technically bullish based off the swing. Okay? Resize in. The market comes right down and sizes and appropriately sizes us in right away again. And right there, we make another 113 pips net. Because the first trade's break even, the second trade made our 113 pips. And we resized in right there once again. Keep on seeing what this market's going to do. Right there, 113 pips net on our trade, and we resize in right here. Market takes us in, appropriately sizes us in because the waves of the market, right? We re-enter. Didn't touch that one. There we go. Sizes us in once again. As you can see here, we'll just keep on seeing what this market wants to do. moving sideways, moving sideways, moving sideways. Right there, we're at break even because the third trade's up 141. The second trade's at break even. The other trade's down, so this is a break even trade right here. Sizes us in once again. This is normally where traders would get stopped out and then watch the market go their way. Now, okay, boom. How much are these again worth? 113, sorry. So this one's up 113. 113. So now we're at break even. Right there. With that being struck, we just fulfilled our 113 pips net in consolidation. How did we do that? Because this trade right here is now break even. This trade made up 113 pips. I mean, we would have actually made it right here, right there. 113, 113, break even, negative 113 is 113 net pips. After all that retracement, we still made our profit because we're trading by the rules of the waves of the market. Having a why or a yes, this is phenomenal. I mean, again, this is huge. Huge opportunity. And so, you know, you don't want to add to a losing position, David. That could be, you know, somewhat accurate. You don't want to add to a losing position with over leverage. If you over leverage, then you're in trouble. That's why we have a plan for equity management. Okay, someone with a $500 account is not going to be doing standard lots with this, or even mini lots with this right now. They're going to build their account the right way, and they're going to build their account fast. Okay, because if you think micro lots are not a way to trade and make money, you're wrong. Like this, micro lots add up very fast. Mini lots add up even faster to start making a standard lot trading available and a reality for you. So once the market here broke us all even, what do? We resized into the market right here. And then 113 pips net was fulfilled once again. And then resized into the market right here. There's 113 pips net right there. Resize into the market. 113 pips net right there. Resize into the market. 113 pips net right there. Resize into the market. And here we are. Here we are. Live market. How many of you see how powerful this truly is? You haven't even taken the course yet. You're just seeing a demonstration on this webinar. You haven't yet seen the live trading sessions. You haven't yet seen the strategies. You haven't yet seen the accuracy, the clarity, the fulfillment of this. This is still brand new and fresh in a lot of minds, okay? Check this out. In the last couple of examples I just showed you consolidation, I showed you retracement, I showed you all that good stuff that normally traders would fear, because fear and greed are a big part of emotions. And look at these moves. See how it's very difficult to lose when traders use this type of methodology? That's 113 times 8. Over 906 pips in the last 2 swings. Huge opportunity. That's how this works. And you can do this on a 15-minute time frame. You can do this on a 2-hour time frame. You know, you can do this on any time frame you want. So let's take a look at the next 2 pairs, the euro pound and the euro US dollar, on what, 15-minute time frames, or do you want to keep the 1-hour time frame? What do you guys want to do? what time frame do you want to see these levels on? What time frame would you like to see these levels on? And David, thank you. David D, thank you for your telephone number also. All right, so Sam says 4-hour chart. Okay, let me turn a 4-hour chart. 15 minutes, says everybody else. So we got 15 minute and 4 hour. Okay, no problem. We just saw the 1 hour, right? And so Patricia, the 10 minutes not too far off from the 15 minutes. So the 15 minute, we'll still be in good shape there. So let's look at the euro pound daily time frame for analysis, and then we'll also add the levels to a 4-hour time frame here on the euro pound 4-hour chart. And then with the euro, we'll take a look at the daily, and then we'll do our grids on the 15-minute time frame. Okay. So the daily time frame for the euro pound, what we're focusing on is, really what's the trend here? What's this market doing? Where's it going to go? How's it going to get there? So here what we see is the market making lower lows, lower highs, broke the trend line to the north, okay? And so as it broke the trend line to the north, now, can it test the backside of the trend line? Well, we've got a beautiful king crown formation here taking place. And again, this could be considered a king crown formation. This could also be considered more of like a wedge pattern here, where the market's giving us levels of resistance of descending, and eventually that tightness will break out, okay? Maybe to test the backside of the trend line. We'll see. But again, now that the market broke the trend line that was bearish, what we can do here is begin to draw long-term outer and inner trend lines from the lowest point of the chart, which would be right around here. Smart trend lines. We have a long-term outer trend line here. We have an outer trend line right there. And then this would be considered the inner trend line right here. So by compressing the charts here, we have inner, outer, and long-term trend lines. Wow, we'll take a look at that, right? We see the inner trend line breaking, and what did it do? Gravitated towards the outer trend line, right? If the outer trend line breaks, it'll gravitate to the long-term outer trend line. So it could be major reversal here, right? However, let's look and see if we have any bullish Fibonacci's, because right now we're making higher highs, higher lows, higher highs, higher lows, higher highs. This is still considered technically a higher low at the moment, even though it's a crown formation there. Let's utilize some Fibonacci's in the daily and see what we've got here in our hands. And we've got here the A, B boundaries that were taken out. Reset the Fibonacci's here at the lowest point. And we still technically have an up A-B swing. So, okay, now what we can see here is that the market broke the inner trend line, formed what appears to be a king crown, but mostly is moving sideways and bounced off the outer trend line, okay? So by bouncing off the outer trend line, right now we're still in an up A-B boundary, which means this crown formation could be a false bear crown, false trap, right? Because this is the next logical bounce here for the market to now take off bullish. So in seeing that, okay, this is an 86% retracement. That means the market would want to rally up to the 1.18 at 0.940. 78. Color it green to match the Fibonacci D extension. And so now, okay, literally what we'd be looking at here is the swing A, B, C to D. However, would you agree that even though the market's in a deep retracement and could possibly go to the D, that we have been sideways since 2016, November until now? We've been sideways in the market on this currency. All right, so the trend line I'm going to delete for just a moment, and what I'm going to do is I'm going to draw where I believe I see the levels of resistance and where I believe I see the market levels here of support. And so here is so far support, that's to buy, resistance to sell. And now we're back at support to buy. Type in a Y or a yes if that makes sense. Okay, so that's what I'm going to focus in on, is this pattern right here. Until we break out, until further notice, that's what I'm going to focus in on. It's consolidation. This is large consolidation that's, upwards of 500 pips or so, almost 500 pips. moving forward. So let's take the level of resistance here and link it to a 4-hour time frame, level of support, link it to a 4-hour time frame. And now what we'll notice is that we now have the consolidation levels on a 4-hour chart. Okay, it's a little bit easier to understand here, a little bit easier to execute, easier to obey. And so at support, what we want to do here is we want to see, is there any opportunities for bullish momentum? Well, in order to go from resistance to support, we need some trend line breaks to give us that, that map, that clarity that this market wants to indeed fall or rally. It's broken trend lines. And so as you can see, the long-term outer trend line is by resistance. So we've broken the inner trend line. Market's rallying, retracing, perhaps going to be looking to extend to the outer trend line. Okay. And ultimately here, there's also a king crown formation, left tip, center tip. Market may want to pull back from a right tip. Tapping a wire, yes, if that makes sense. Not the best looking king crown there, but still possible setup there. So let's just go ahead and utilize our smart Fibonacci's here. And we've got our second AB swing as we head from support to resistance. And we can also begin to utilize our uptrend line. And as long as we stay above the uptrend line, we're in pretty good shape to continue making higher highs, higher lows along the way. I think you're in great shape, David. I think you're really in great shape with this trade. So on a 4-hour time frame, right now we'd be thinking, okay, we're at an up AB boundary, but man, these candles, 4 hours before they close. I got to wait to see how I get in. Not with leveling, right? With the grid trading, you can size yourself in. And so let's take this opportunity to go ahead and put 500 bars of memory in the chart and perform the formula on the 4-hour time frame. So on the 4-hour time frame, if we compress our charts, this would be the highest point up here. This is the lowest point down here, so let's measure it. And that's about 544 pips. So we take 544 times 3, divide that by 2, divide that by 10, 81 pip levels. 81 pip levels for this grid. Excuse me. So we go ahead here and into the matrix. Distance between levels is 81 pips. All right, just to make sure. Yep, 81 pips. And as you can see here, we'll put both sides in case the market retraces, buy order, and we'll go with 81 pips to close this out net. Click OK. There's our levels right there to help us take advantage of this market. Okay. So, clearly, we can see here, we have support and resistance. And if this market was at support and began to U-turn and we bought the market right here at support, this is how it would look. We bought the market, pulled back a bit, 81 pips net. We resized into the market now, rally, retrace. Once we fulfill this, 81 pips net once again will be the case. If we come down, break the trend line and enter, we'll be reset. If it pulls back even midway, 81 pips net. This is a 4-hour time frame. Type in a Y or a yes if this makes sense to you, to see the levels, to help you understand where the market can go, where it will go, where you can begin to make your profit even if it does go against you. So if you pick the wrong direction by accident, okay, because no one's 100% accurate on choosing market direction for the most part, right there, then and there. The fact that the market can go against you, and the moment it starts to pull back, it does the mathematics to cancel, replace, and put you into a position where if this trades at break even and that trades up 41, 81 pips, your net profit you want is 81 pips. When it makes that total figure, it closes you out. That is a huge, huge safety net. Huge. Okay? Huge safety net. But type in a Y or a yes if you see how this works, because let's take a look at what happened back with support, to become resistance last time, since we saw these levels here. Let me go ahead here and add some more bars of memory real quick, just to kind of see where the market was at. All right, so for example, let's say this market was at support and formed this morning star, and we wanted to buy in based off the levels from support to resistance, 81 pip levels, right? So right here, We got in, and the market rallied, 81 pips net. We got it, right? 81 pips net, beautiful. Since we're going from support to resistance, right, we want to size back in. So we get back in there, retrace, extend, another 81 pips net. Resize back in. And the market goes against you. Once you size back in, boom, it comes down. Sizes you back in right there. Comes down, sizes you back in right there. When it U-turns and hits this level right here, well, guess what? This trade's break even. This trade is down 81 pips. This trade is up 81 pips. So you're at zero, okay? You're at zero. And then when the market does this, to strike your original entry, you're up 81 pips net. I don't know why you're a yes, that makes sense. Right? Because if you think about it, this trade was down 81 pips. This one was break even. This one was up 81 pips. So it's zero. And then boom, you make your 81 pips net there. Done on these three trades, or these three entries for this trade. And you resize into the market right there. And what this market does is once it strikes that target right there, you're closed out with 81 pips net. And you're resizing the market right there. Then the market comes down. Strategically sizes you in here. As it's pulling back, sizes you in here. And right there, break even. Okay, down 81 pips, up 81 pips. Break even so far. Right here, your 81 pips net is achieved. And you're resizing into the market. 81 pips net. Resize into the market. Resistance is hit, 81 pips net. Now you can reverse your matrix to start selling, going bearish from resistance to support. So from support to resistance, one of the most dangerous, choppy types of strategies to perform, consolidation, has now pretty much been tamed with something that is formulated to take advantage of the waves of the market. And let's face it, in consolidation, there's a lot of waves. 1, 2, 3, 4, 5, 6, 7. 81 times 7. 571 pips. Well, heck, the range is only 448 pips. You made more pips sizing in the market than the actual consolidation range itself. How many of you like that? 448 pips was the range, and you ended up making 571 pips off these moves. Now, Randy says, Jose, why the 4 hour, not the 1 hour? Well, Randy, this was just an example. Somebody wanted to see the grids on the 4 hour time frame. You could have done this on the 1 hour chart. It's just that the example was someone wanted to see this on the 4 hour chart to make sure it works on all time frames. And it works on all time frames, all currencies. So, and I'm going to show you right now how it works on a 15-minute time frame, right? So here, for example, we just got sized in. If the market comes up and hits this one, 81 pips net, fulfills the D and pulls back, 81 pips net. If it breaks the trend line, we'll still be okay. Doesn't matter which way it goes. 81 pips, okay, or 81 pips. You see how this can work for you? Pretty awesome, right? So I love this opportunity here to show this to you guys. I'm very excited. For those of you that typed in your telephone numbers, very, very excited for you. Let's take a look, last but not least, the Euro US dollar, which is at a low of support here in a trading channel and climbing. So what we're really focusing in on here on the Euro is, you know, essentially looking at the sideways movement that's been taking place. Because it's been in sideways movement here for quite some time. And there you can see, I mean, it's crystal clear. This market is in a consolidation trading range of sideways movement on the Euro. And here is the support. Here's the support. Here's the support. Here's the resistance. Here's the resistance. How many of you see the sideways movement of the market on the Euro? right? So at support, the market's making higher highs, higher lows, higher highs, higher lows, higher highs. Now, obviously, you know, Patricia says, hey, don't tell us it's going to go up, it's going to go down. At the same area that the market scores points, right? Yes, right now it's going down because at sell high price points, it goes down. Sell high price points goes down. Sell high price points, it can go down. Question is, sometimes it can go down far, sometimes it won't go far. So that's why we want to use our Fibonacci's to kind of get a gauge of where this market is right now and what it's going to do. In here, what you can see is this market so far is in its second swing. Okay, that second swing came all the way down with a morning star, right around the 76 level. So the 1.27 is the D extension of this move. That's 1.0173. 1.0173. Or 1.10173, I'm sorry. 1.10173, color it blue to match the Fibonacci extension. So this market is in an up A, B, C to D wave movement here. So, okay, we've got from the live market here about 149 pips before this market wants to go ahead and fulfill that D. You know, in this particular case right now, we can take a look and see where past levels of resistance in the market can act as a floor support. This market's been U-turning, so it might here come down and then U-turn back up. There's resistance that can become support there. So I got to look at the bullish momentum here. Okay. So in this case, what I'm going to be looking at here is very simple. Taking this D extension, linking it to the smaller time frame. And now I'm looking at this on a 15-minute chart, everybody. 15 minutes. Okay? 15 minutes. And yeah, may want to fill the gap too. You're right, John. So more than likely it's what it's probably doing. So there's a 15-minute time frame here, and this market's making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So what do we do here? Let's go ahead and put the grids on here. And there's 500 bars of memory right there, so what I'm going to do is compress my charts. This is the highest point of the chart right here, and this is the lowest point of the chart right here. So by doing the measurements, we can see that this is a 271 pip area where we take 271 times 3, divide that by 2, divide that by 10. 40 pips is the grid distance between levels. 40 pips. So we take our matrix, and we pull it back up here, and we say, okay, 40 pips is the distance between the levels. You know, if I just want to close out with 40 pips profit, then let's do that, 40 pips. But right now, I'm still anticipating the D extension to be fulfilled, so I'm going to be taking it on both sides of the market buying. Click OK. And now we have our 40 pip increment here to take advantage of. Okay, so ultimately, right, when we look at this, we see this market here climbing towards the D extension. There's the D extension right there. Okay? And so let's look at this from the perspective of the most recent. Well, let's look at this from the C to the D, right? When was the C pullback of the daily? Let's go ahead and get a real honest perspective of what's been taking place. That C pullback was April 9th, okay? So it wasn't very long ago. So let me go ahead here and take April 9th, the price point low, the April 9th, which was 1.05684. And let's go ahead and use that as a guide to see what we could have made or not made, right? And so let me go ahead and add more bars of memory here now that we have the grids on the screen. And what I'm going to do here is keep things simple. Let me go ahead and put the line, horizontal line. I'll color it black. But the C pullback's at 1.05684, right? So there it is right there. This is the C pullback right here of the daily time frame. True or false? C pullback. April 7th, 8th, and 9th right there, right? So obviously the market was in a downtrend, okay? Let's just say for the purposes of demonstration, you don't trust any of this, and you just want to go ahead and say, well, I don't want to get in. It's falling, Jose. Why would I want to get in buying? And you want to draw your trend lines. And hey, I applaud you for that. I think that you should question everything that has ever brought to your attention to make sure that it's something you want to do and you want to use, right? I think that's a fabulous, wonderful quality to have, is to question everything and anything before you do anything. So here, first of all, inner trend line broke. So, hey, Jose says that the market gravitates to the outer trend line. You could have got your levels there, but let's just say, well, Jose, if it bounces off this trend line and falls, I don't want to be in a position to have it go against me. So let's just say you don't take on any grid trading opportunities until that outer trend line breaks. Okay? Well, there it broke. Yes or no? There it broke. So by breaking there, okay, now what do? Let's just say that we wait for the trend line to break, it bounces up the backside, and then we finally get in at this area right there. Okay? We're making higher highs, higher lows, higher highs, higher lows. We're confident in this entry, so we take it as a buy order. Again, 15-minute time frame. Okay? And so we watch and see what happens here. Okay, market rallies, retraces right there. This is, again, 40 pip increments. So now we just make 40 pips net as we're trading from C to D. And then we size into the market here once again. Comes down to our original entry. Goes against us here for a little bit. Goes sideways a little bit, and right there, 40 pips net achieved. Okay? So 40 pips net, 40 pips net, and we size in once again. And the market strikes the next target, 40 pips net. And we resize back into the market. And the market's rallying, retracing, 40 pips net once again. And we resize into the market. Here it comes in and strategically adds to our position because the markets are waving. And look at that big move right there. Boom. 40 pips net on these two moves. Okay, right there. 40 pips was net because one was down, one was up. Okay, so break even, then 40 pips net, size in, 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 40 pips net, strategically size this back in here. $40 pips net on our trades. Size back in, 40 pips net. Size back in. Strategically takes us into the trade as it retraces. And here's where we're at right now. So if this wave comes back up to this line, we just made another 40 pips net. Having a Y or a yes here, if you see how this works. So far from the daily C pullback to the daily D extension, sometimes it's difficult to find out where to draw your kind of trend lines. What levels of resistance can become support? But this kept it simple, kept it easy to understand, easy to execute, easy to obey, and pretty much did all the heavy lifting for you on a 15-minute time frame. And you're just raking in the pips. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 400 pips. 406 pips of profit so far. Patricia, that sounds delicious. Hopefully you have enjoy those ribs. How many people in this room like what they see so far and would like to see how they can become a part of the grid trading course with absolutely no risk, where we're basically paying you to take on this course opportunity and invest in your future here starting in 2017 and beyond? Type in a yes if this is something you would like to see as a reality for you. Because I've shown you different time frames, I've shown you results, I've shown you how to take advantage of this opportunity. And the reality is, ladies and gentlemen, all this is wonderful, all this is great, okay? But ultimately, just like I showed you yesterday, 226, 228 pips from yesterday's webinar alone, and then 145 pips from this morning, 300 plus pips, 373 pips in the last 24 hours, just by showing you how to size in this market and take advantage of it. Wonderful opportunity, ladies and gentlemen. And again, we've only got 30 spots left to receive a 30-day money-back 100% satisfaction guarantee. Ladies and gentlemen, we're so confident that you'll love this grid trading course that if for any reason you're not satisfied over the next 30 days, after you receive the grid and you do not see long-term potential with it, we'll give you back 100% of any money you've paid to us, whether it's a payment plan or a one-time payment. But ladies and gentlemen, with this course being $3,495, okay, our early bird pricing is over. That's why we're now offering it for $2,245. Lock in this deal right now, but you got to hurry up because the price will increase up to $3,495, and the bonuses I'm going to give you will disappear. We're providing you with payment plans available. If you need it, type in your telephone numbers. We're giving you guaranteed results or your money back, but we've only got 30 spots left because Josh wants to keep this a private and intimate course here moving forward because we've about reached the cap on this. And so if you want lifetime access to the Matrix tool, if you want a payment structured plan, if you want 30 days, money back, 100% satisfaction guarantee, type in your telephone number right now because the only risk is inaction, ladies and gentlemen. And these are the red hot bonuses you're going to receive today. Bonus number one, Josh is extending not 1 month, but 3 months access to live trading session follow-ups with this grid trading course. That means you're going to trade live with Josh for 3 months in the grid trading course. Bonus number two, if you don't have my man versus pip system, you're going to get it with Euro session rules. What that means is now you'll have a trading opportunity every single day in the European session to capitalize on with my man versus pip system. My way of saying thanks, giving back to you for investing in yourself. And bonus number three, like I said earlier, lifetime ownership of the Matrix tool. As long as you have the trading software, you'll always have the Matrix tool. We opened this up to 100 spots, okay? Now we're down to less than 30. Once these 30 are gone, so is the bonuses. Everyone else will be charged a monthly maintenance fee moving forward. I'd like to go ahead and say type in your telephone numbers with the word bonus, but I'm just going to say type in your telephone number, period, okay? And we'll go ahead and move forward in helping you take advantage of this. So, Deborah, thank you for your telephone number. Also, we've got Nathan, thank you for your telephone number as well. Grant, thank you for your telephone number. Donnie and Andre, thank you for your telephone number. Lawrence, thank you. Andrew, thank you for your telephone number as well. Sam, thank you for your telephone number. We see you. Bob and Franklin, thank you for your telephone numbers as well. Folks, what I can see so far is in this webinar, we're getting close to that 30 number mark. And if all these people in this webinar take action today and enroll with either the one-time payment or payment structured plan or maybe some kind of opportunities we've got with vouchers or whatnot, these bonuses are gone. The Matrix tool for life is gone, and so is the bonuses I've got to offer here. Again, your timing is phenomenal. So if you've got questions, if you want to at least have a conversation with someone to make sure this is for you or not for you, do it now. Type in your telephone number because time is of the essence, everybody. Time is of the essence, and this is for any one of you that wants to win upwards of 90% of your trades by taking control of the wave movements in the market. Okay? If you own the Mastermind Club, type in your number. Leveling course, type in your number. Target trader, type in your number. This works on any pair, on any time frame. You don't need to know much about trading to be successful once you learn the grid formula. Richard, thank you for your telephone number. Robert, thank you for your telephone number as well. Yes, we do have payment structured plans available to fit your budget, ladies and gentlemen. So do something today. Your future self will thank you for, because we've got an incredible opportunity here to give you 30 days, 100% money back guarantee. But it's only for the next 30 people who type in their telephone number and take action. What this means, everybody, okay, not starting today, but starting from the moment you get the actual grid and you take the course, we're so confident that this works, that you can do it, that we're literally going to give you the entire program risk-free for the next 30 days. That way, you don't have to sit here and take my word for it. You can take it today, or you can take it in mid-May when you get it, try it out, test it out right on your computer, and you'll have the chance to see it work for you, and then you decide whether it's the right program for you, because let's face it, at the end of the day, the only person you're going to trust is yourself, okay? All we ask, though, is that you type in your telephone number and you give it an honest effort. So let's do this together, everybody, because your timing is phenomenal. And when your timing is phenomenal, that means that there is urgency involved with this, and there is some super urgency involved to help you take advantage of these markets before the markets take advantage of you. And ultimately, you don't want to take action now before these bonuses are gone, because if you don't, okay, time will run out and it'll be very difficult to come back from it. So these are the grids that we placed here today. We looked at the New Zealand yen, we looked at the Euro New Zealand, we looked at the Euro pound, Euro US dollar. So far, 3 out of the 4 grids are paying out beautifully because we're taking advantage of the wave movement. So we're up 11 pips, 10 pips right now collectively. But these are strategically set to close us out for profit at certain levels once we get the information from the matrix on the chart. So again, 345 pips earlier, now up 11 pips here today. I mean, it's just, this is going to be the technology that everyone will be using here. So don't get stuck ending up paying more months down the road when everyone's got it and you want it, when you can get it right now at a very low discounted price, payment structure plan available, and high-powered bonuses to get you actively pursuing your financial freedom goals and dreams, everybody. Today's the day to take your life back as far as a trader, and today's the day to say, you know what, I want those red-hot bonuses. I want lifetime ownership of that. I want the man versus pip system with the Euro session rules. I want 3 months of live follow-ups with Josh, because we're going to eliminate your risk from this. We have a plan for you. Type in your number and have a conversation, okay? Because today, like I said earlier, this is a $3,495 program. Today you're going to get it by saving $1,250 up front. At $2,245, you can lock in this deal right now, but hurry up because the price will increase and the bonuses will disappear. We've got 30 spots only before the guaranteed results. The 30-day money-back guarantee is gone, and so are the bonuses here for lifetime access to the chart, to the matrix tool. Payment plans are available, yes, sir. Okay, this is a risk-free investment, and you deserve to have a vibrant and fulfilling trading career. Josh will coach you through these life-changing principles of the Grid Trading course, but all we ask is that you promise to log in and actually listen. If you can simply commit to doing that, folks, you will see results. So make a decision to maximize who you are, what you're capable of, and what you get to enjoy out of this life as a trader. But don't listen to me in this web presentation anymore. Just type in your number and do it. If you start the training and you don't feel like it's working for you, you can return the entire education at no cost to you within 30 days. Simply contact your account rep and request a refund. I don't think that'll happen, though, because of how powerful this is for you. But the only risk right now is inaction, ladies and gentlemen. So I do want to thank the following people I've seen posting the telephone numbers. Once again, thanks, Mike, for your telephone number. Lily, thank you. Eddie, thank you for your telephone number as well. Richard, thank you for your telephone number. Franklin and Alice, thank you for your numbers as well. Colleen, thank you for your numbers. Folks, with that being said, I wish you all health, happiness, and success. I thank you for your time. I thank you for your trust, and I congratulate you on your new journey to start dominating the market landscape and becoming the trader you've been so long on the hunt to become. Folks, go get them. This is Jose Tormos. This is FX MVP. Congratulations, Grid Traders. We'll see you at the top.